Hey everyone, welcome back to Corporate Decoder. Today, AtlasClear Holdings Incorporated ATCH just filed their current report confirming recent financial results, and I am seeing a very specific trend that matters. Quick note, this is not financial advice. Just my take on public filings for educational purposes. The company is highlighting its performance, but to raise an underlying detail that might be more telling than the headlines. So what we have here is a standard Form 8K filing from AtlasClear Holdings Incorporated. This usually means the company is reporting something important that happened recently. In this case, they are talking about their financial results for the quarter and the first 9 months of their fiscal year, which ended on the 31st of March 2026. They released a press statement about it. And that statement is attached to this filing as an exhibit. Think of it like a company officially announcing its report card to the public. This is a pretty common document, a Form 8K, which is used by public companies to announce major events that shareholders should know about. It's like a company's public diary for significant happenings. The company itself is AtlasClear Holdings Incorporated. You might know them from their stock ticker ATCH. They are incorporated in Delaware, which is a popular state for businesses to set up in. Their main type of stock is common stock, and each share has a very small stated value of just a fraction of a cent. This is typical for many companies, and the stock symbol for AtlasClear Holdings is ATCH. This is how you'd find it on the stock exchange. It's traded on the Nice American LLC. Now this checkbox here tells us something interesting. AtlasClear Holdings Incorporated is classifying itself as an emerging growth company. This is a designation given by the US government to newer, smaller public companies. It means they can follow some relaxed rules from the government for a certain period. Especially when it comes to financial reporting, they can delay adopting new accounting standards, for example, which can give them more time to catch up with larger, more established companies. This can be a double-edged sword though, because it might mean their financial statements are not following the very latest accounting rules, potentially making comparisons harder. The core of this filing for us today falls under Item 2.02. This section specifically deals with the company's financial results and their overall financial health. So the press release they're attaching is all about how they performed financially. Essentially, they are saying, go look at Exhibit 99.1, that press release has all the details. And crucially, they're telling us to consider that press release as part of this official filing. So whatever was in that press release is now considered official information in this report. This is a very important legal disclaimer. It means that while the information is being provided, it is generally not being labeled as officially filed, in the same way as, say, a full annual report. This is a common practice for Item 2.02 filings related to earnings releases. It offers some legal protection to the company. They are essentially saying, we're telling you this for informational purposes, but we're not letting it open us up to certain types of lawsuits under specific sections of securities law unless we explicitly say so elsewhere. It's a way to share timely financial news without immediately triggering all the legal obligations of a formal filing. And here is Exhibit 99.1, the press release itself, dated May 13, 2026. This is where the actual financial performance numbers are detailed. It's crucial to remember our earlier point about them being an emerging growth company. This might influence how these numbers are presented or what accounting standards they are following. Now, let's look at what the company might have said in that press release, which then gets filed here. For a company like AtlasClear Holdings, when they release financial results, we want to see how their business is actually doing. Are they making more money? Are their costs going up or down? Are they profitable? Unfortunately, the text of the press release itself isn't directly provided in this HTML document, only the reference to it. However, based on previous news headlines, AtlasClear Holdings has been focused on its financial results and corporate updates. For instance, a headline from November 2025 mentioned they reported their fiscal first quarter 2026 results, and importantly addressed the elimination of prior going concern uncertainty. That's a significant detail. A going concern warning means a company's auditors have doubts about whether it can continue to operate for the next year. Removing that uncertainty is generally a positive step, suggesting improved financial stability. We also see a headline from September 2025 about their fourth quarter and full year fiscal 2025 results, and another from October 2025 highlighting a 49% increase in net income at their subsidiary Wilson Davis & Company. These suggest they've been working to improve profitability, at least in parts of their business. When we look at the numbers filed in these 8K earnings releases, we're typically seeking trends. Are revenues growing consistently? Is net income increasing? How are their expenses managed? For an emerging growth company, you might expect some degree of volatility or a focus on growth over immediate profitability. However, the fact that they had a going concern warning previously and have now eliminated it means they've likely made some changes to improve their cash flow or financial structure. Let's imagine the press release contained some key figures. If, for example, it showed revenue growth, we'd want to ask, is this growth organic or driven by acquisitions? Is the profit margin improving alongside the revenue? If costs are rising, are they rising faster or slower than revenue? For a company like AtlasClear Holdings, which has elements of its business like Wilson, Davis & Company performing well, the question becomes whether the overall company is on a sustainable upward trajectory. Considering the historical context with the prior going concern warning, the elimination of that uncertainty is a major indicator. It means the company has likely taken steps to secure financing, improve operations, or reduce debt to a level where auditors are satisfied about its ability to continue as a going concern. This is a crucial hurdle for any company facing financial difficulties. The fact that they are still positioning themselves as an emerging growth company also suggests they might not yet be at a scale where they can confidently navigate all accounting standards without an extended transition period. This means investors should pay close attention to the footnotes and any qualitative disclosures they make about their financial position. In terms of external context, institutional holders like Skyview Investment Advisors and Meteora Capital are listed. Although their share percentages are noted as 0.0%, this could mean their holdings are very small relative to the total shares outstanding, or that the data is not fully up to date for all purposes. However, even small positions can be indicators of sentiment. What I am actually looking for is a consistent trend of profitability and revenue growth. Now that the going concern issue has been addressed, the real test will be whether they can sustain this positive momentum and continue to grow their business without relying on accounting standard extensions that blur the picture for longer-term investors. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, give us a like and subscribe. Join our Discord.